Now, let's talk about manufacturing, because this is where the big breakthrough is coming, and we are going to eventually become, and are becoming, the low-cost producer in manufacturing, even beating out China. I'm going to show you how that works. The technological revolution in manufacturing is started by 3D printing, robotics, artificial intelligence, and nanotechnology. There are so many things that these technologies combined can do that it really stretches the imagination, but I'm going to try to give you a couple of them. First of all, through these technologies, they're going to be able to make materials that are lighter than steel and 10 times as strong. So we're actually creating new products and materials through these technologies. They're going to have a little box no bigger than a sugar cube that can hold the entire Library of Congress. A device that travels through the human body that is so small that you can swallow it and it goes on to destroy cancer cells. They have a technology now that can spray on solar cells onto a piece of paper, just like you're printing something. You create a solar cell, and it's going to cut the cost of solar energy way down, which is another revolution in itself. And then the ultimate, within the next 10 years, they are taking 3D printers, they're taking your body cells, and they literally are reproducing bones. There's people who have had their jaws replaced by a 3D printer that takes your cells, builds the jawbone right from the cells, so there's no rejection of the body against the foreign tissue, and it's going to be able to replicate bones. The ultimate that they're working on, and they are 1/3 of the way there, is ultimately they're going to be able to print body parts, like a kidney. They are about 5 to 10 years away from actually producing a kidney that is made out of your own tissue and that is put into the body as a replacement without any problems at all. Now, to show you what artificial intelligence will do, you've heard about in 1979 there was a big breakthrough in artificial intelligence because IBM was able to design a computer to beat the world chess champion from Russia. This was an incredible breakthrough for a computer to be able to beat one of the world's greatest chess champions. And they did this through artificial intelligence. But just to show you how far they've come, they have now created a robot with artificial intelligence that has landed a full-blown fighter jets on an airplane, on an aircraft carrier. And this is something that is only used by the greatest pilots that we have to be able to land a plane on an aircraft carrier. And they have done this twice now in July. The other thing that the artificial intelligence was able to do, there's a couple of times where it couldn't land, it aborted the mission, and it landed safely on land. So this is an amazing thing when you think about the fact that artificial intelligence and robotics has advanced so much that they can actually replace fighter pilots. But if artificial intelligence is enough to stretch your imagination, I want to take you one step further, and this is something that I've had a very difficult time getting my arms around because this is a whole new world. It's called molecular manufacturing, and so what it does is it creates manufacturing at a level, at the atomic level. In other words, you can take a couple of atoms, turn it into a molecule, and make body parts. Now, just to give you an idea of how small that world is, if you took the human body, you tried to figure out how many atoms are in the human body. There was a professor, Don Andrews, in the 30s that calculated this for his chemistry class. And he started off by saying, okay, I'm going to use a P to represent an atom, and then I'm going to figure out how many atoms there are in the body. So he said, if you filled the whole United States with atoms, 4 feet deep in P's, you wouldn't get there. So he filled the whole Earth full of P's, 4 feet deep, still didn't do it. Finally, at the final calculation, he came up with 1 octillion atoms, which is 250,000 Earths, 4 feet deep in P's. And that's 1 octillion. So you got 250,000 Earth, 4 feet deep in P's, and that is the level that they're going to be manufacturing on. Now, to give you one more example, If you take a pin, the head of a pin, it's got 5 million atoms across. They now have discovered a way to make glass, are you ready for this? 2 atoms thick. So if the top of a pin is 5 million atoms, this is only 2 atoms, and this is going to go into computers and transistors and everything to do with technology. This is an amazing breakthrough, and all of these things together are going to make the United States the supreme low-cost producer, which is bringing people from all over the world, not only with their talents, but with their corporations. Now, in the last 10 or 15 years, I'm sure that all of you have heard about how many companies went overseas to China to be able to tap their low-cost labor. Matter of fact, many major corporations have plants over there to be able to take advantage of the low cost. They are now coming back to the United States. Dow Chemical, GE, Ford, and Caterpillar to produce 4 major companies that are bringing their plants back into America because of the low-cost gas and because of the technology breakthrough. And the main breakthrough here is in robotics. For example, China is so concerned about this, they have a company over there called Foxconn. They have already produced 20,000 robots, and those robots are producing materials cheaper than their labor force. So now, because of the fact that they can produce it cheaply over there with robotics, they still have the problem of shipping it back and forth overseas, which is a huge cost disadvantage for them. Foxconn is now creating companies in the United States with robotics and is producing goods for the United States, and this is going to create a lot of opportunities for people in this country. Now think about this. If even 5 years ago you could have thought about a Middle Eastern company coming over to America because of low-cost energy and a Chinese company coming over here because we can beat their labor costs. This was even unthinkable 5 or 7 years ago, and here we're seeing it before our very eyes. And just to give you a demonstration of that, we moved out of California for many reasons because of the bureaucracy and many other reasons, which I won't go into detail, but we all know that California is probably the most expensive place because of their welfare system, because of the taxes, and because of the bureaucracy. It's probably the worst place to do business. If you want to put in a low-cost operation, you don't think about going to California. Here is Tesla, an electrical company, a company that makes electric cars, is producing competitively cars in California by using robotics. They have 160 robots that are producing 400 cars a week, and they plan on doubling that by next year. So this is an incredible demonstration of what America has to offer when it comes to these things. Now, with all these wonderful things going on in technology and in these industries, you would say, well, that's the place to invest. Well, I would say not usually, and I'm going to show you why. We will invest in any of these companies, and we have in the past, but the problem with these companies are they're started by young entrepreneurs. They're not proven in their ability to manage a company, even though they have the right technology, and there's a lot of risk in these companies. You never know which one is going to make it and which one isn't. In addition to that, these companies sell at very high multiples because they have all the growth ahead of them. So you're paying extraordinary prices for unproven companies with one thing going to technology, but that's not enough to make it. And I'm going to show you that. Guess what the great technology breakthrough were in the turn of the centuries? It was the automobile. Everybody was using horse and buggy and manual labor, and here we had the car coming. This was the technological breakthrough of the turn of the century. They produced over 1,800 cars. 1,800 individual car companies were produced. How would you ever know which one was going to survive out of the 3 or 4 that survived? You all heard about Hudson, Studebaker, Packard, Nash Rambler. I even owned a Nash Rambler at one time. Those companies are not around anymore. and there's only 3 or 4 companies left. So it would have been extremely difficult, even though you saw it coming, to try to pick the company that was going to be the winner. So how do you make money on this knowledge? You make money at the turn of the century. You could have made a lot of money by investing in steel, by investing in aluminum, by investing in electric parts, rubber for tires, and other supply, without knowing or caring which company was going to be successful, because these products are used in all automobiles. So if you invest in the picks and shovels instead of going mining, you're going to make money no matter who is successful. So our strategy is to follow these technologies, to look at the companies that are going to benefit from it, and to buy those proven companies that benefit from the technology, not the technology themselves. Let me give you an example. At the 1800s, as you all know, there was a big gold rush. Everybody went mining for gold. Levi Strauss made their fortune, made more money selling jeans to miners than anybody did mining gold. And that's our theory. When there's a gold rush, you invest in the picks and shovels, and you make a lot of money, and you don't have to guess who's going to be the top one in the area. Now, you've heard me talk a lot about 3D systems, especially last year. And for those of you who haven't heard the story, I just want to repeat it, because this is an extraordinary feat that's been going on. Now, 3D printing actually got started about 20 or 30 years ago, but just like the breakthrough in technology and fracturing, it's only taken off in the last 5 to 7 years. And what it is called, it's additive printing. So what you do is you get a blueprint, you put it in a machine just like a printer, and then you have the raw material come into the machine, and it prints it layer by layer. It doesn't cut something out of wood or steel. It literally builds it from the ground up. And by building it from the ground up, you get an accuracy that you could not get under any other process. The advantages to 3D printing are so immense that it's hard to figure out just what it's going to be. It's about a $2 billion industry, but let me give you the main benefits of 3D printing. It costs, the savings by using 3D printings are as high as 70%. You have a quick turnaround. You have less waste, almost 60% less waste, because instead of cutting something out of a raw material, you're building it from the ground up, so there is no waste. You have new shapes and designs and figures that were not possible under any other process, and you have new business models for entrepreneurs. The amount of things that they can do with 3D printing is truly amazing, and GE is already using some of the 3D printing to build some of their engines for their electrical divisions. Now let's take a look at 3D Systems, because there's a company called 3D Systems who's the pioneer in this, and let's take a look at whether this would be a good idea to invest in the company. Now, first of all, we as value investors, the first thing we look at, no matter how great something is how cheap is it? Can we make money? Is there a low-risk situation? That's the most important thing. We can think of a lot of things that are going to do great, but we don't know how much risk there is on the downside. Now, just to give you an example, 3D printing, and I'm going to use a very common metric that you use in this business. We use many different metrics, but let's just use one to make it real simple. And that is what we call a price to sales. In other words, a company has $100 million in sales, it probably sells for $100 million, one-time sales. Century Management's portfolio, every stock in your portfolio combined is selling at 0.83 of sales. That means less than one-time sales. The Russell 3000, which is big and small companies, sells at about 1.15 times sales. The S&P, which has 500 of the largest companies in the United States, sells at 1.45 times sales. 3D printing is selling at 11 times sales. So you get the idea that this company is very highly priced relative to any other measure you want to use. Well, why is it selling that high? Because of the growth potential. People are looking at the growth and saying, wow, this is going to be a big thing. But that stock is already probably discounting 5 or 10 years' growth. And if it doesn't happen, look out below. Now, let me give you an example. Every technology company, when it starts, sells at high multiples of sales. Apple sold at one time at 7.4 times sales. Right now, it's selling at 2.6 times sales. Dell sold at 8 times sales. It's selling at 0.4 of sales. Intel sold at 16 times sales. It's selling at 2.2. Cisco sold at 39 times sales and is selling at 2.6. And Amazon sold at 197 times sales and it sells at 2.2 times sales. So the point I'm trying to make is whenever these companies mature, no matter what the multiples are on the top, they're going to go down to about 2 times sales. Now, the sales of 3D System is $4 per share. If, God forbid, something happened to that company and it sold at 2.4 times sales or 2 times sales, it'd be selling at $8. Even if it grew and doubled for 3 years and the sales were $8 a share and it sold down and sells at 2 times sales, it'd be $16. The stock is at $56 today. So from $56 down to 8 or 16, that's a long ways down. That's far too much risk than we would ever want to take. Now, let's assume that everything turns out right for 3D printing. So I made a projection that for the next 10 years, they're going to grow at 25% a year. They have never even grown that much since they began, but I'm just going to give it the benefit of the doubt so you get the idea. So we're going to grow it out for 10 years, 25% a year. Their sales would go from $4 to $37. But if at that time it sold at 2 times sales, the stock would go to $74. Well, if it went to $74 from 56, that's about a 3% return over 10 years. That is not something worthwhile or even to reach for. But to think that if something would go wrong, that it would go down to $16 or $20 a share, you've got a lot of downside and very little upside. And as Jim will show you later on in the session, we like to get a little bit on the downside and a lot on the upside. This ratio is completely reversed, and therefore, we would not consider buying it at these particular price. Just to give you a little insight, the insiders are selling 25% of their stock. So you kind of think about if all these great things are going to happen, why are the insiders selling it? Because they understand, like we do, that eventually something is going to slow down. Stock may not be that high. But just to give you an idea, when I first got in this business, I was very enthusiastic about this one stock. I used to talk to the president all the time. He told me all the glorious things they were doing. Everybody was happy. We were making money. And one day I woke up, went to the office, and there's an article saying that the insider's selling a big block of stock. I thought, God, why would he be selling this stock after he told me how great this thing is? So I called him up and I said, hey, I just noticed that you guys are selling a lot of stock. Why are you doing that if it's such a great company? And he says, well, I've got a son going to college. So I thought, oh, okay. So I went back to my desk and I figured 5 million shares at $20 a share, that's $100 million. That is one hell of a college. Can you imagine how smart this guy's going to be when he graduates from that college? So the point I'm making is when insiders are selling, that is usually not a good sign. It doesn't mean that the stock's going to go down, but it does mean that maybe the insiders would prefer to diversify, as the other words they use is, I'm just diversifying my holding. Well, I don't like to diversify my holding if I've got a big winner. So if this company was a big winner, I don't think they'd be diversifying. So you're going to learn a lot about these new technologies. You're going to read articles about it, and you're going to want to be tempted to buy these stocks. And I'm cautioning you, don't buy the stocks unless they're at multiples that are reasonable, because there's many ways that we can make money by investing in things that are related to that. Now, let me just remind you of something that I shouldn't have to remind you of, but let me bring it up to situation in the tech bubble. Do you remember in the tech bubble where the internet was coming out and tech stocks were going at 50 and 100 times? They weren't making any money and nobody cared because you were just going to make a lot of money. And they made proclamations for these companies that actually came true. Everything they said about the internet did come true. The problem is, if you look at the NASDAQ, which was all technology stocks, it reached 5,000 at the peak. It came down. And here it is 14 years later, and it's still down 25%. What happened? The technology delivered, but the problem was that these stocks were discounting 20 years of growth. And if something happens in between that, look out below. So remember, no matter how exciting the technology is, and we're going to be talking a lot about that, don't get caught up in the idea of paying ridiculous multiples for these stocks, because you could be sitting 10 years from now and still not have a profit. So we're very excited about the technology. We are looking at the areas which are going to benefit. Jim is going to give you the exact areas that we're investing in. We're very excited about it, but we're not excited about paying high prices for high multiple stocks.